So this is basically question number 5 of our PPT, May-June 2020, paper 31. Okay, what is asked to us? They have given us 2-year columns. One is 2018 and 2019. I will directly go to the question. State 3 differences between statement of cash flow and a cash budget. Can you tell me what is the difference between a cash flow and a cash budget?
Yes.
Anybody? Yeah, tell me.
Mr.
Cash
Cash flow
flow.
is more. My bad, go on.
Okay, tell me, Umesh.
Mr. Cash flow would be basically the transactions that the business makes are in and out of the money.
So
But
you are
like
telling all
cash,
the transactions that the business makes is a cash flow statement? Is a cash flow?
it's like where the money comes in and goes out.
Okay. So where money comes in and goes out is cash flow. So what is cash budget? You
Miss,
need
it's
to give
basically
differences, okay? You need to give difference between cash flow and cash budget.
Miss. So can we say that a cash flow doesn't necessarily have a limit? It can just keep going until like there's no limit to it, but like a cash budget has a limit it can go to because the business sets it based off of how much capital they have.
No. Farah, can you say difference between a cash flow and a cash budget?
Cash budgets are prepared monthly, where cash flows are prepared annually.
Okay, fine. So one difference, it's for 3 marks. So you need to give 3 differences. Cash flow is prepared on an annual basis, whereas cash budget is prepared monthly or periodically. A cash budget is something that you estimate, you predict that this might come in and this might go out. Am I correct? When I'm talking
Yeah.
about budget, it is basically an estimation. It is basically a prediction that this might come in, this might go out, this might be our inflow, this might be our outflow. But when I talk about cash flow, it is the actual thing that happens, the actual inflow and actual outflow. So cash flow, it will use the actual data that has already happened. So I can say cash flow uses which data? Historical data. Cash budget uses predicted figures. Okay. Second distinguish, as Farah rightly said, cash flow is prepared on annual basis and cash budget is prepared on periodic basis. One more distinguish, please. Farah? Farah?
Cash flow, 1 minute. Budgets are made by are used for senior managers, and cash flows are used for investment purposes.
Is this a proper distinguish? Okay, cash flow is used by investors. Cash budget is used by management. You can say like that. The way you said was wrong. Cash flow is used by investors to see whether to make the decisions whether they can invest in a company or not, so that they know whether they will get dividends or not. So cash flow is used by investors to make decisions regarding whether they would receive dividend or not. Budget is used by management to make decisions regarding what they need to control and from where they need to bring in money. So to make management decisions. Okay. You need to memorize this. Only 3 distinguish. If you know, it's fine. Cash flow is made as per a particular format which is done by IAS 7 And cash budget does not have any particular format, okay? It is made as per the purpose. With me?
Yes.
Yes.
Now, what is the next thing that they are asking us to make? They are asking us to make a statement reconciling profit from operations with the cash from operations. Can you tell me what is profit from operations?
Profit before interest and tax.
So profit from operations is profit before interest and tax. What is cash from operations?
Total cash flows from the business operations.
So basically they want us to find out cash flow from operating activities. What do they want us to make? Cash flow from operating activities. That means they want a statement where you start from profit from operations. Profit from operations is profit before interest and tax. How do you get cash from operations? How do you get cash from operations? What do
You
you
make
do?
the operating activities
You
thing.
add the non-cash, non-operating expenses. Then what do you deduct? What do you deduct?
The non-cash, non-operating income.
Income. Then what do you get?
Cash
Farah, please
flow before
answer.
working.
You get
Um,
profit before changes in working capital, right? Then you do your working capital changes. That means what do you add? Increase in the current liability and decrease in current assets. And you're going to subtract what? Decrease in current liability and increase in current assets. Then what do you get?
net cash flows
Profit
from
before.
working capital after working capital changes.
Okay, net cash flow after working capital changes. Then what do you do?
You add you deduct the tax and interest paid.
Minus interest paid minus tax paid. Yes. So this is exactly that we do. So we need to start from profit before interest and tax, and we need to reach at cash from operations. Are you with me?
Yeah.
Yes.
Are you all with me? Yes.
Yes.
So I will directly see where will I go. Profit from operations. From where will I get this?
Um, Difference between the retained earnings
Difference
after
between
adjustments
the
of
retained earnings.
dividend.
That means I have retained earnings at start. How much?
104.
104,000. I have retained earnings at end. How much?
79,300.
79,300. What will I do now? What adjustments will I do in this?
You deduct any dividend paid.
You will deduct
uh,
dividend paid. Is there any dividend paid?
yes, interim dividend adjustment for 5. Sorry.
Adjustment 5. Interim dividend is 0.11 per share. It was paid in August before 40,000 ordinary shares were issued. So that means interim dividend is paid on how many shares? 400,000 shares into 0.11. Umesh, even you can answer. What is the amount of interim dividend that is paid?
0.11 per share.
How much dividend have you
So it'll
paid?
be 400,000 into 0.11.
So how much is the dividend that is paid? 44,000.
44,000.
Is there any transfer to general reserves?
No.
Just check, is there any transfer to general reserves?
Oh yeah, there is.
Yeah, there is transfer to general reserves. Okay. Now, when I was reading the adjustments, I got this one thing over here. See the adjustment number 4. Sorry, adjustment number 6.
They gave
See
us
the
the
adjustment
profit.
number 6.
They gave us the profit.
They have
55
already
and
given us the profit before interest and tax. They have already given us the profit before interest and tax. It is 55,950.
yeah.
Farha, are you with
Yes.
me?
Yeah.
Please reply. Okay. So I already have the profit before interest and tax, so I don't need this now, right?
Right.
No.
Right? Come on. Now in this, what will I add? So this adjustment is taken care of. This adjustment is taken care of. Now what will I add? Non-cash, non-operating expenses. Come on, tell me what are the non-cash, non-operating expenses. One would be the depreciation and other would be the profit or loss on, no, the loss on disposal. Are you all with me?
There is a disposal.
Yes.
Okay, fine. I have 3 non-current assets. Is any provision for depreciation given to me?
There is skill for
Which
motor
one?
vehicles.
No. In the balance sheet, is any provision for depreciation given to me?
No.
No.
No. That means these non-current assets are maintained at what value?
Net book value.
That means these non-current assets are maintained at net book value. Okay. So I will take one by one. I will take premises. Are you with me?
Yes.
Yes.
For premises, there is this first adjustment that says there is no purchase or disposal of premises during the year. Can you see that?
Right.
Yes.
That means only one thing can come related to premises is depreciation of premises.
Right.
Yeah? Come on. Premises has opening value of how much? What is the adjustment that is related to premises? Premises
There
were
was
valued at 400,000 on 1st Jan 2019. What does this mean?
The value has
revaluation of
increased
premises.
by 80,000.
Sorry, I did not get you.
The value has increased by 80,000.
The value has increased by 20,000. Okay, fine. So I have premises opening valuation, how much?
320,000.
320,000. Closing value is how much?
380,000.
Sorry,
380,000.
380,000. Value has increased by how much?
By 60,000.
Huh?
Miss the difference is 60,000.
Premises were revalued on 1st of January 2019 at 400,000. That means this is
By
31st of
31,000.
December. This is 31st of December 2018. Are you with me?
Yeah, miss.
Yes.
That means this is 1st of January 2019. Please reply. I'm waiting.
Yes.
That means this value is not 320 on 1st of January 2019. Your premises are already valued at 400.
Right.
Yeah.
Yes.
And on the last day on 2019, that is 31st of December 2019, your premises is 380.
Yeah.
Okay, I have just done a reverse of premises. 1 minute. Come on. Premises 400 year, opening and closing over here. Correct?
Right.
Now come on, tell me what is the depreciation on premises?
20.
20 is the depreciation on premises. So the first expense is depreciation on premises. How much?
20.
20,000.
20,000, and this you are going to add. Okay. I need you to see things related to machinery and prepare whatever accounts that you need to prepare for machinery. I'm just.
Bonus.
Now, who's going to explain me about machinery?
Opening balance is 202,000.
Just 1 minute, okay? Huh. Tell me, opening balance is how much?
202.
2,000. Okay.
Um, addition, additional machines have been purchased, which is 28,000.
And am I supposed to make a full cash flow statement by any chance? Yes.
No,
Yeah.
The C part says that you have to make a full cash flow statement. Yes.
yeah,
Okay. So there is additional machinery purchase. So when you have to make a full cash flow statement, what would you do? They want you to start from cash from operations. Are you with me?
yes,
Okay. So I will write cash from operations. After that, what will I do? So 1 minute. I'll just see. You have to make a full cash flow statement. You will write your headings from before. Okay, so I am writing over here cash flow from operating activities because that I'm already going to find in the A part. Are you with me?
Yeah.
yes.
Yes. Then after that, what will you do? Your second activity is what? Investing activities. After that, what is your third activity?
Finance.
Financing activities. So you will make the heading directly. And whatever comes, you will start putting in. Are you with me?
Yeah.
Yes.
Okay. So when you're doing this, you exactly know what are you doing. Come on. Now you said additional machinery is purchased 28,000. So I'm making a machinery account which would become my working note number 2. I will write machinery Yapara. Now can you please go ahead? What is the start point of this?
Opening balance 202,000. Then additions 28,000.
Addition 28,000 and closing balance how much?
203,000.
Closing balance 203,000. This additional that you've purchased machinery, where will it go?
It will go in the investing.
Investing activities. So I will just go and write over there purchase of machinery. Inflow, outflow,
Outflow.
outflow 28,000. With me?
Yeah.
Yes.
Okay, fine. Now what is it with this? Come on, tell me. In operating activities, how will this be recorded?
The depreciation would be 27,000.
They have
And it
given
would,
us nothing as related to disposal. So if I have a balancing figure over here, machinery account is maintained at net book value. So the depreciation will be on the credit side. If you have, what is the total? 202 plus 28, 230, 230. So I have depreciation on machinery. How much?
27.
It's 27. Okay.
Yeah.
Machine depreciation 27,000. So this is all added, right? This is all added, right?
Yes.
Yeah.
Okay. So machinery thing is done, right? And I will make it as a working note and I will write over here working note number 2. Done.
Yes.
Yeah.
I proceed ahead. My third non-current asset, motor vehicle. So this would be my working note number 3. Yeah,
Yeah.
come on.
Yeah.
What is the opening value of motor vehicle?
118,000.
118,000. Opening value on the debit, closing value on the credit. Now here, because there is some 200, I'm writing full amount. Okay. Opening year, closing year. If any disposal is there, it will be on which side?
On the credit side.
If any disposal is there, it will be on the credit side. Now tell me, what is the disposal of the motor vehicle? I think it's in adjustment number 3. Come on.
Yeah. Motor vehicle with net book value of 39,000.
Motor vehicle is costing 65,000. Accumulated depreciation is how much? 26,000. So
26,000.
net book value of the motor vehicle that is sold is how much? 65,000 minus 26,000. Net book value of the motor
39.
vehicle sold is 39,000. So disposal is 39,000. It is sold for how much?
Sold for
32,500.
32,500.
It is sold for 32,500. So that means when you are selling the motor vehicle, where will you write the sale proceeds? Which activity?
Investing
So you
activity.
will directly go and write in your investing activity. What will you write?
Cash
Sale of
inflow of
motor
32,500.
vehicle.
Sale of motor vehicle. When you're doing it together, maybe you might have some difference of 1-2 lines, but you know that you are incorporating everything.
Yeah.
Sale proceeds of motor vehicle, how much?
32,500.
32,500. Okay. Now it is sold for 32,500. So do you
Let's say
have
the
a
profit
profit or
goes.
loss?
There's a profit.
Huh?
There is a profit.
Read the ahead part.
No, miss, it's a loss.
How it is a loss?
Wait,
Miss, it's a profit, yeah, because the
It is
net book
it has
value
net
is,
book value of how much?
yeah.
39,000. You have sold for how much?
Wait. Wait, never mind. It's a loss. It's a loss.
32,500. It has net book value of 39,000 and you have sold for how much? 32,500. That means you have a loss on disposal.
Oh, no, it's a loss.
It is loss on disposal. This is all in working note number what?
3.
3. What is the loss on disposal? 6,500. Do not forget to show your workings in whatever format you do, but the working has to be there. Okay?
Yeah.
Come
Okay.
on. So this is my motor vehicle account at net book value, where I write the opening year, the closing year, the disposal year. I do not have depreciation. So the depreciation I will get over here as my balancing figure. Yeah.
Yeah.
Or
Yeah.
is there any purchase of motor vehicle also? Because if I'm seeing
There
over
is
here,
this.
this side is more. But I want
No,
depreciation. So this side
is
cannot be more. A
it
new
is
motor
depreciation.
vehicle was purchased. Yes.
Yes.
So I will write purchases over here. 74,000. Come on. Buying a motor vehicle, which activity?
Investing activity.
Investing activity. So I will go and write in my investing activity also. Purchase of motor vehicle. Inflow, outflow.
Outflow.
Outflow. Are you with me?
Yeah.
Yes.
Okay. Now I will get my depreciation on motor vehicle. 118,000 plus 74,000. Total is 192,000. 192,000 minus 39,000 minus 113,200. What is the depreciation?
39,800.
Are you getting the same thing, Umesh? Are you doing with
Yeah.
me?
Yeah, I was just putting in my calculator.
Motor vehicle depreciation 39,800. So this is all the non-cash, non-operating activity expenses. There is no non-operating income. This is all non-operating, non-cash expenses. I'll just add all of this and add it together. So it is 20,000 plus 27,000 plus 6,500 plus 39,800. So the total is 93,300. Correct?
Yes.
93,300 plus 55,950. So it is 149,250. Are you with me?
Yes.
Yeah, yes.
Okay, fine. Now what do you do? So this is what? What is this called? Before changes in?
Working capital.
Working capital.
Okay. So this is cash flow. Is it called cash flow? Who has the format with them? So this is called profit before working capital changes. Now that means I have to do working capital changes. Come on, let's do the working capital changes. Tell me what are the changes in working capital? Inventory. Increase or
Inven-
decrease?
Decrease.
decrease.
So if current asset is falling, what will you do?
You'll add it.
Add.
You add.
If current asset is increasing, minus. Current liability is falling, then minus, and current liability is increasing, add. Inventory is falling, so I will write decrease in inventory. How much?
4,000.
Yeah.
Okay. Decrease in inventory is 4,000. Just calculate 36,500 minus 32,550. It is 3,950. Yeah,
Yeah, it's a 3,950.
so this is added. Come on, talk about trade receivable increasing or decreasing?
Increasing.
Increasing. Increase in current assets, what do you do?
You
You
deduct.
subtract it.
So you'll write increase in trade receivables. 3,100 you will subtract. Cash at bank will you take now?
No.
No.
This will be at the end. Now go to current liabilities. Come on, current liabilities. Trade payables.
Trade payables has
Increase or
increased.
decrease? Increase. So you're going to add
Increase. 4,000
increase in
300.
trade payables. How much? 4,300.
4,300.
So do these adjustments. 3,950 minus
Miss, you
3,000.
won't take the other payables?
The other payables, why will you take? Minus interest, minus tax is, see, one is tax and one is interest. Darling, one is interest, one is tax. So if you go back to your format, minus interest paid, minus tax paid, interest and tax are treated separately.
Okay.
You have your format. Now I will just take you to the format. Wait if you want. See over here. So if you see over here, you have this format of yours, which is giving you cash flow from operating activities. Are you with me?
Yes.
So your cash generated from operations has everything, but interest and tax are taken as a separate activity itself.
Okay.
So minus interest paid, minus tax paid are two things that is adjusted. Because here you're only going to talk about cash flow of interest and tax. Okay.
Okay.
When you're talking about opening outstanding interest and closing outstanding interest, there is no cash flow in that.
Okay.
You had to pay this much interest at the beginning of the year. You have to pay this much interest at the end of the year. That you had to pay interest. What does opening this tell you? Opening accrued interest tell you. You had to pay this much interest at the beginning of the year. You have to pay this much interest at the end of the year. Where is the role of the cash flow? What interest paid and tax paid is going to be shown over here after cash generated from operations. But when you're talking about trade payables, your opening trade payables was this much, your closing trade payables was this much. That means it is telling you that you have, there is there is increase in trade payables. That means there is an outflow.
Okay. Miss, if it was another expense that was part of the other payable,
If
it
it
would
is
be
interest, if it is interest and tax, that is treated over here. Any other current liability, bank overdraft also is not taken. So you have only three current liabilities. One is other payables. In other payables, if it is interest and tax, you will avoid. Other than that, if there is something else, then you can take into consideration.
okay.
Okay? Interest and tax is treated separately. Are you with me?
Yes.
Umesh, also you are with me?
Yeah. Yeah.
Okay. So this is coming up to how much? 3,950 minus 3,100 plus 4,300. So this is coming up to 5,150. So what is your cash from operations? 149,250 plus 5,150. Your cash from operations is 154,400. Now you need to be very careful of what they are asking you. They said reconcile profit from operations with cash from operations. Cash from operations stops over here. Can you see this?
Yes.
Yeah. Yes.
But net cash flow from operating activities, if you want to come from cash from operations to net cash flow from operating activities, you have to minus interest minus tax.
Right.
Okay, so they have asked you to reconcile profit from operations with cash from operations. So I have already come from to cash from operations. Are you with me?
Yes.
So your cash from operations is how much? 154 400.
Yeah, miss.
So I will start this from cash from operations. What is your cash from operations? Come on, tell me.
154, 400.
154 400. You will deduct what?
Less
Minus
interest, less
interest
tax.
paid minus tax paid. When you deduct this interest paid, tax paid, what will you get?
You'll get the closing.
Net cash. Now its flow or use I will come to know later from operating activities.
Yeah, miss.
Hmm.
Miss, I have to go somewhere. Is it okay
Yeah,
if I complete
you
it?
can go.
Okay, thank you.
Okay, now you tell me how will you find the interest paid and tax paid?
Miss the accrued interest, yeah?
First, you tell me interest paid. Yeah,
Yeah, so for accrued interest, do we find the difference between the opening and closing years?
1 minute.
Um,
Now you are talking about the interest paid. Come on.
yes, so about the interest, we can see accrued interest. The opening is 2500, the closing is 7500. So do
Hmm.
we just find the difference in between, or do we take the closing one?
Okay, fine. Come on, Duko Bhaiya. I have given this opening plus expense minus closing. Can you see this?
Yeah, yeah.
Okay. So it is opening plus expense minus closing. Come on, tell me for interest. What is opening?
2500.
What is expense?
Miss, what is the expense?
See
Okay,
adjustment
okay,
for
okay. Yeah, tax and interest charge. It's 8250,
expense is 8250. What is closing?
750.
750. So 2500 plus 8250 minus 750 is
That's
interest.
10,000. 10,000.
10,000. How do you get the tax paid?
Opening plus expense minus closing. Again, the same
Okay.
formula.
So tax paid. Again, come on, tell me. What is opening?
Tax is 12,600.
1 minute. 12,600. What is expense?
13,400.
What is closing?
Closing is also 13,400.
Hmm.
So it's 12,600.
Okay, tax paid is 12,600. So this is net cash flow
Yeah,
from
miss.
operating activities. How much? You do all this plus and minus, you will get 131,800.
Okay.
Okay. Investing
Yeah,
activities, you
miss.
already saw everything related to non-current assets is already dealt with. Is there any
Yeah.
non-current asset that is left?
No.
No. So this is a negative figure. So what you will
Yeah,
write?
miss.
Net cash
Net cash.
used in investing activities.
Yeah, miss.
How much is the net cash used in investing activities?
Miss, I'm calculating that.
Hmm.
134,500.
Huh?
28 1000 plus 32,500. Oh, okay, never
32
mind. That's
start with
positive.
positive 32,500 minus 28,000 minus
Yeah, I
72,000.
calculated that. 69,500.
69,500. So it's a negative figure, so it's used. Now you will get all your
Yeah, so
financing activities from here.
yeah,
Okay. Now if you see over
yeah,
here, your share capital has increased by 40,000
right.
and your share premium has increased by,
20,000.
that means you've issued share at premium.
Yeah,
So I will write issue of shares.
yeah.
How much?
40,000 and 20,000. Share
60,000.
premium is 20. Yeah, 60.
You can write at premium if you want.
Happens.
Okay. Now if you see
Right.
a bank loan, it is repayment.
Yeah.
How
We
much?
did 70,000. Repaid. We paid 70.
So repayment of bank loan minus 70,000.
Yeah.
Is there any dividend paid? Dividend paid is financing activity.
Happens.
What is the amount of dividend paid? We had calculated over here.
It was
400,000.
44,000.
Yeah, 44,000. So you're getting money from financing activities or you're using?
Was very using.
You're using. How much?
Yes, I'm calculating. Miss it's 54, negative 54.
What will you write for this?
Net cash used in financing activities.
Net cash used in financing activities. Then,
When you add and subtract all of the values
so
that
you
we
will
got.
get net increase or decrease in cash and cash equivalent. If it's a positive amount, you will get
This
increase. If
is
it's a
positive.
negative amount, you will get decrease. What is the positive amount?
8,300.
So what will you write?
Net increase in cash and cash equivalent.
Net increase. Net increase in
Cash and cash equivalent.
cash and cash equivalent. What will you write?
Net increase in cash and cash equivalent.
Then what will you do? Add
You will add the
cash and cash equivalent at the
opening.
start.
Yeah, opening cash and cash. You get the closing.
What is the cash equivalent at the start of the year?
Yes, where's that written again?
What is the cash equivalent at start of the year?
Oh yeah, 8,100.
So your cash equivalent at the start of the year is 8,100. When you add both of that, you should get your cash equivalent at the end
16,400.
of the year. You should get this. Then only your sum is correct.
Yeah, we got 16,400. It's same.
So 16,400. This will be cash and cash equivalent
At the end of the year.
at the end of the year. Okay.
Yeah,
And this is done with the cash flow.
right.
Okay. If you want, you take a 5 minutes break.
Okay, Mr.
Discuss the effect of increase in general reserves during the year on the cash flow. If you're increasing the general reserves, that means you are transferring something from the retained earnings to the general reserves.
Yeah.
So when your general reserves is increasing, it is a transfer from retained earnings to general reserve.
Yeah, that's true.
Okay, so that is not any cash transaction that is involved.
No, there's no cash transaction.
So there is no impact on the cash flow for increase in general reserve.
Right.
Okay, they want you to discuss the effect of increase in general reserve. Does it have any impact on the cash flow? So you have to
No,
tell
it
over
doesn't.
here that when there is an increase in general reserves, you're basically transferring something from the retained earnings to the general reserves. So there is no cash
Yeah.
transaction involved. You're just changing the headings. So this does
Yeah,
not
nice.
impact the cash flow statement. Come on, the next part. There is additional information. There's a bank loan of 100,000 which is to be repaid in 2022. The
Yeah,
directors
nice.
made an early repayment in September 2019. Let's go and see the bank loan. Bank loan. Bank loan is made, repayment is made 70,000. Can you see this?
Yeah, nice.
Okay. Discuss or not whether or not the directors were right in repaying the bank loan. So when I have to say whether they are right in repaying the bank loan or not, I will go and look at my cash flow statement. My cash flow statement still has a positive balance of 16,400.
Mm-hmm.
Does it have a positive balance of 16,400?
Yeah, it does.
Okay. I have used a lot of money in investments,
Yeah.
and I have also used a lot of money in repayments
Yeah.
because I have made a huge money from my business operations.
Yeah, right.
And even after investing, even after paying so much of loans, okay, I still have a positive cash balance.
Yeah.
So am I right?
Yeah, you are.
Okay. So there is still, now you have to justify it. So there is still a net increase in cash and cash equivalent even though the loan was repaid.
Yeah.
Although the cash and cash equivalent is a small increase,
Yeah.
but still you will be saving the loan interest.
Yeah.
Now your loan capital would be low and own capital would be more.
So the gearing ratio is better.
Your loan capital is low and own capital is more.
Yeah, that's
If
true.
own capital is more, that means your gearing ratio has been improved.
Yeah.
Okay. You have additional non-current assets and you have to pay dividend, but it is okay. At the point, from the point of view of investors, your gearing ratio is very good.
Yeah,
So
nice.
the directors were right in repaying the bank loan and they were also right in issuing additional share capital. So this is how
Yeah,
you
nice.
have to frame your answer. It is for 4 marks. So 1 mark you will get, there is still an increase in your nice net cash and closing cash and cash equivalent. You will save the interest. Your gearing is improved. Yeah, there is
Yeah, nice.
large amount of operating activities, cash generated from operating activities, which is helping you to repay the loan. So the directors have made a correct decision. Okay.
Yeah,
With this, we complete the sum of May-June 2020, paper 31.
yeah, nice.